All right, welcome back to the Four Horsemen of Real Estate podcast. Today we're diving into Alberta. Alberta is not just significant within Canada. It's quite frankly globally critical when it comes to oil holdings. With nearly 1/10 of the world's proven oil reserves, recoverable reserves, Alberta oil sands, they're a powerhouse in the energy world. This context, you can deepen it to really understand that Alberta's role on a global stage, basically number 4 in all the world. I'd like to say Canada is number 4 in all the world, but almost all of that oil that we have is in Alberta. So really, Alberta is number 4 oil reserve in all the world. One province, which has the vast majority of oil for all of Canada, is number 4 in the world. So when you want to look at the economic drivers and the economic barriers, you have to look at the energy sector when you're looking at Alberta, which is why you will tend to see laws a lot more lenient, whether it be on rental markets, whether it be on income properties, whether it be on any, even if you're talking about foreclosures or power of sales. In a province like Ontario, they will not allow you to foreclose on a property very easily. Instead, the courts prefer you to take it to a power of sale, where the leftover proceeds go to the homeowner, the borrower. Whereas in a place like Alberta, because of these large swings, they're a lot more lenient to a borrower, a lender actually coming in and just foreclosing on the property, because they will have these wild swings of value where a property is worth $200,000, then it's worth $400,000, and then it comes back down to $200,000, all because they're so heavily impacted by oil. Now, to be responsible, understand that Alberta has had a steady growth, and appreciation, property values, all of that kind of stuff has been steady because they are a powerhouse in energy. And right now, we're just seeing a blip due to the instability between Canada and the US. So let's just give a little bit of geopolitical background, what we got dealing with when we're talking about Alberta. As amazing as Alberta is, there's some real issues going on. The United States is wrestling with inflation, record debt, and quite frankly, a polarized political climate. Yes, we can just throw out Donald Trump's name right here, insert his name, and it's going to create issues. But of course, what is that about? Well, it's about the 2026 midterms. And why does Alberta real estate have anything to do with the US midterm elections? Well, it's because Alberta is resource driven. Oil, natural gas, and commodities shape its economy. And the US energy and trade policies set, well, they're actually setting the tone for what's going on in Alberta right now. If Washington doubles down on energy security and LNG exports, well, Alberta rides that wave. If the U.S. cuts deals with OPEC or oversupplies shale prices, or prices drop, that figures into their price volatility. Global instability in the Middle East conflict, U.S., China, trade tensions, these all feed into the price volatility, which, of course, flows straight into or out of Alberta's economy, its jobs, and ultimately demand in the area of real estate. That's the backdrop you need to know. That's the backdrop you need to keep in your mind. That volatility is creating issues in Alberta, which is why you have the Premier of Alberta saying different comments like, maybe it's time for us to leave Canada and join with the US to stabilize some of that volatility by joining up with them. So or maybe she just doesn't like Mark Carney. But anyways, all right, let's get into the residential market first and foremost. In Calgary, the housing market is shifting. Sales are actually down significantly and inventory is climbing, much like we're seeing in a lot of different parts of the country. The benchmark prices are off by 3 to 4% year over year. Unlike our neighbor in Saskatchewan that we were just talking about last week, detached homes are, they're quite resilient. They continue to be, but condos, row houses, they're sliding. We're seeing that in across the country, definitely in Ontario. We're seeing it here in Alberta as well. Now, Edmonton, though, Edmonton's a different story. Prices are actually up year over year. Even as listings are growing, for investors, Edmonton remains attractive, more affordable, more cash flow, and less volatility than Calgary. I mean, maybe it's because of the Edmonton Eskimos rather than the Calgary Stampeders, but Edmonton right now is looking much better than Calgary at the moment. Now, Calgary's rental market saw a surge of new supply. Vacancy rates jumped from 1.4% to nearly 5% in the last year. That means that landlords need to sharpen their pencils, so to say. Leases are going slower, tenant concessions, all of these kind of things. These are now back on the table. The pro formas, if you're an investor, need to be more conservative when you're looking at Calgary's rental market. Edmonton's rent, on the other hand, as we were just mentioning, they're actually climbing, but still affordable is the key word there, affordable. And anywhere in the country where you're finding affordable housing, that area is continuing to rise. Now, here's something interesting to remember. Alberta doesn't have rent caps. Increases are allowed once every 12 months with proper notice, of course, which gives landlords flexibility even in a competitive environment. So they're able to change up, unlike other parts of the country that have strict rent controls. If there's availability, they'll raise them up, but they can also drop them down more readily than you can in other parts of the country. Now, here's something that investors need to take away from all of this. Is sort of the investor playbook in Alberta in 2025. Residential. Calgary is cooling, is sort of on the cooling side. Edmonton remains affordable, cash flow friendly. Multifamilies, conservative underwriting is the key. Assume, lower leasing, and you're going to have to be more competitive. And then remember to zoom out. Because of oil prices, because of the US policies, because of all of these Trump factor, if you don't like Trump, but if you don't like that volatility, the US is absolutely a concern and affecting Alberta in this way because of the connection with the energy sector. So this is creating some issues for Alberta currently. It could create a boom in the future as well, but for right now, it's really creating an issue. So, in other words, Alberta is a market where you need both to make sure you've got someone local that can help you out, but you also need to have a global view to understand what's going on there. And guys, that's today's episode of the Four Horsemen of Real Estate podcast as we talk about Alberta and we continue on westward into BC next. See you guys next week.